FAIRtax is coming, don't stand in the way. FAIRtax is coming across the USA. FAIRtax is coming, clean up this mess. We got to get rid of the IRS. Hey, hey! Hey, hey!
Hello and welcome once again to FAIRtax Power Radio. I'm Bob Paxton.
And I'm Ron Malero.
We are
the FAIRtax Guys,
bringing you good tidings of great joy that the IRS one of these days is going to go away. We will no longer have an income tax. We will no longer have the IRS with an audit threat over your head. You will no longer have to suffer federal withholding from your paycheck. All of that goes away with the FAIRtax. We're going to get there.
And I know it's a little late for this, but 'tis the season for tax reform.
It is, and that is going to be a big topic in this Congress, especially with the change in leadership in the Senate. But I'll tell you what, it doesn't really matter who's in control of the Senate. You have still got to keep your eyes on the politicians. They will slide one off on you if they think they can get away with it every single time. Again, the tax code we've got right now is the tax code the politicians want us to have, and it ain't no good.
That's right. We have to lead our leaders to the correct conclusion. Now, if you've been paying attention, the FAIRtax legislation has been resubmitted in both the House and the Senate. In the House, it's H.R. 25, as it always is, every 2 years. And in the Senate this year, it's S-155. In the House, the primary sponsor is Rob Woodall of Georgia. And in the Senate, the primary sponsor is Jerry Moran of Kansas. So thank you, congressmen and senators, for getting our FAIRtax up and running in the Congress again.
Now, Senator Moran has always been a supporter of the FAIRtax legislation. Why did he step up to be the primary sponsor this time?
Well, I think he's more senior. It had been sponsored by Zaxby Chambliss of Georgia. Well, Mr. Chambliss retired. David Perdue won his seat, but David Perdue is a freshman. So I think they wanted somebody more senior to focus on the FAIRtax, and that's what we got in Senator Moran. So thank you.
Okay, that's what we've got. Focus of the program today. We've spent the last several times talking about all of the great and wonderful things that the FAIRtax is going to do for people, and I really think that needs to continue to be the primary focus of our meetings here. But there are some folks that just really want to know the nuts and bolts of what the FAIRtax is and how it works. So we're going to talk today about the fundamentals of the FAIRtax, and then we'll go back to what it really does. But today is going to be kind of how it does it. And the first thing you need to know about the FAIRtax, and you will not hear this from people who are wanting to keep the status quo, the FAIRtax is not a massive new tax that's going to be imposed on top of everything you're already paying. The FAIRtax replaces, keyword, replaces practically the entire federal tax. It doesn't touch federal excise taxes. But when the FAIRtax becomes law, listen to this: personal income tax, gone. Corporate income tax, gone. Capital gains taxes, gone. Estate tax, gone. Inheritance tax, gone. Alternative minimum tax, gone. Self-employment tax, gone. Social Security payroll tax, gone. Medicare payroll tax, gone. All of those taxes go away, and they are replaced by the FAIRtax. And Ron, touch quickly on the Social Security and Medicare part of it here.
Yeah, I remember in one of my presentations when I first got involved with the FAIRtax, and I mentioned how the FICA taxes would go away, and they're the most regressive. And one lady got upset with me because she thought that Social Security and Medicare would go away. Nothing could be farther from the truth. In fact, the FAIRtax will support Social Security and Medicare to a more proper aspect, because the FAIRtax will be collected on every purchase of every new product and service in the country. And it's written into the bill. By the way, the bill is only about 130 pages long. You can go online and find it. You can find a post on the FAIRtax Guys Facebook page. In the bill, it is written that a certain portion of the proceeds of the FAIRtax must go to Social Security and Medicare. Right now, the only way that we're supporting Medicare and Social Security is through the payroll tax. So people who are earning money in other ways, investments and so forth, they're not contributing to Social Security. If everybody gets Social Security and Medicare when they're, at a certain age, Why doesn't everybody contribute to it? Under the fair tax, they will. Every time a purchase is made in this country, Medicare and Social Security are supported. So it's much better funded under the fair tax than currently.
Okay, one thing that the fair tax I think is fairly unique. Most of the time when a law is implemented, it's just there. It's engraved in stone and it stays. But the fair tax has got something called a sunset provision in it. The fair tax is contingent upon repeal of the 16th Amendment. We've talked about the 16th Amendment. That came out in 1933. I checked 1913. One extra three there. And it authorized the federal government to collect an income tax. Prior to that, it was unconstitutional. The Supreme Court had held so. So you needed the 16th Amendment in order to have an income tax. And the fair tax wants to make sure that they can repeal the statutory authority for the IRS to operate and collect income taxes, but an act of Congress, such as the Fair Tax Bill, cannot change the Constitution. There's another entirely separate process for doing that. But the Fair Tax Bill says, okay, what's going to happen here is that we do not want to give the government both an income tax and this consumption tax on the fair tax. So if the 16th Amendment is not repealed through the regular process, and that takes a max of 7 years, then the fair tax just simply says, okay, if you're not going to do that, we go away, you get your IRS and you get your income tax back.
Yeah, you have to repeal the 16th Amendment. I mean, anybody listening, do you feel you can trust Congress with both an income tax and a consumption tax? No, we know the answer to that. We can't let them do it. The income tax must be repealed. It should have never been ratified anyways. I mean, heavens knows why they did that over 100 years ago, but it's time. We got to repeal the 16th Amendment, get rid of the income tax. Founding fathers didn't want it. We need the fair tax, a consumption tax, which is more what they had in mind, over 230 years ago.
Now, that really shouldn't be a problem, I don't think. Can you imagine living under the fair tax for, 6, 7 years, no IRS, no withholding, you get your full paycheck, you get this prebate, a tax refund actually, every month, and then the process doesn't go through and it says, okay, we're going to go back to the income tax and the IRS. Can you imagine the revolt that's going to happen in the populace if that actually happens? So I don't believe there'll be too much trouble getting the 16th Amendment repealed once people start living under the fair tax.
Yeah, I can't imagine that it's going to take anything close to 7 years, maybe 7 months, to have this the 16th Amendment. When people learn that the IRS is going away, when the over 70,000 pages of tax code and instructions and regulations and bureaucratic gobbledygook goes away, and you get your whole paycheck, I mean, they're going to trade that in and go back to the original income tax the way it was when it was rescinded? No thanks. That's not going to happen.
No way. That's not going to happen. But again, let's talk again for people who might be just hearing about the fair tax for the first time. They say, what is it? It is a consumption tax. It shifts the point at which you are taxed on the federal level from when you make your money, i.e. on the income tax, it taxes income. The fair tax, a consumption tax, will tax you when you spend your money, which means you will pay it, and you will pay it anonymously at the cash register every time you make a retail purchase of new goods and services. Keywords there, retail, the business-to-business wholesale purchases not subject to the fair tax, only at the retail level. New goods, if you buy used goods, that's not subject to the tax. And, of course, services will be taxed under the fair tax.
Now, think about that. You buy a used car under the fair tax, there's no fair tax charged on it because somebody already paid it. You buy a pre-owned house, I don't know why we don't say used houses, but anyways, you buy a pre-owned house, no fair tax on it because somebody already did. When it was new, somebody paid the fair tax. We're not going to do double dipping, all right? The fair tax will be charged once and once only.
All right. And now we kind of need to get into something that a lot of folks might not quite understand. That's the difference between an exclusive and an inclusive tax. Sales taxes, as we know them now, are exclusive, which means they are not included in the price of your item. If you pick up an item off the shelf at Walmart or somewhere else, you take it, the price tag says $100, you take it up to the cash register, the lady will charge you $106, $105, sales tax is usually 5 to 7%. It's calculated as a percentage of that price and then tacked on. So the price you see on your price tag is not what you get charged at the cash register. That is the exclusive sales tax, and that's why people recoil in horror when they think, wow, 23% sales tax. It's not going to change a $100 item into a $123 item because the fair tax is inclusive.
And it's not only inclusive. I mean, it will be on the price tag, and it'll be on the receipt. But think of it this way. We touched on this in the last program. The embedded costs. All right, the tax code is so wildly inefficient that there are embedded costs on everything we purchase right now. Every new product and every service has embedded costs on the average of 22%. All right, when the fair tax becomes law and the income tax goes away and everything is so much simpler and business costs are reduced, greatly reduced, that embedded cost is going to drop dramatically. All right, the cost of items may go up a little bit, but not 23%. And so the 23% will go in there, and it will be included in the price of the product, which is, like Bob said, it's a little different than the current sales tax, but that's the way it's designed. Now, think of it, our current income tax is inclusive. Let's say you get a job someplace, I'm going to make the figure simple, and you get a job, a tremendous job, and it pays $100,000. Do you take home $100,000? No, under the current system. Let's say you're in the 25% tax bracket, and we know that under $100,000 you're in much higher tax bracket. But anyways, 25%. You're going to take home about 75% because the income tax currently is inclusive. When you agree with your employer on how much you're going to get paid, you're not going to get paid that much. Uncle Sam is going to get part of it. Okay, so that's inclusive. The fair tax will be inclusive. It will be included in the price of the purchase that you're making.
Yeah, for example, if you make $100,000, your tax rate's 25%. Your tax is $25,000.
Yep.
So again, with the fair tax, tax is spending and not income. If you spend $100 and the tax rate is 23%, then 23% of that $100 is tax, and that will show on your receipt. The only inclusive tax I can think of right now, and pardon me, well, actually it's not quite as bad as it used to be, was when you stop at the gas station and fill up your car.
Yeah.
Don't think for a minute you are not paying a multitude of taxes at state, federal, and local levels are included, but you never see them because they're included in the price. The price of a gallon of gas now is about $2.15. You pump in 10 gallons, you pay $21.50 and go on your way. It's not added on later as you do when you buy things in a retail store. And that's the way the fair tax is going to be. Again, with the big exception there, it will be like the gas taxes, except that when you get your receipt, you will see $100 price tag. 23 of that $100 was fair tax.
Yep, and the other $77 was for the item. That's going to remind people every time they make a purchase, whoa, 23% of my purchase is going to the federal government. That's a good reminder, because right now with withholding, you get your paycheck, people talk about their withholding, what they actually get, and they forget. I mean, they really forget about all the money that was taken out and went to Uncle Sam. So that's not going to happen. I mean, under the fair tax, we're going to be reminded every time we make a purchase and every time we write a bill for a service and so forth about how much is going to the government. And that's a good reminder.
Yeah, and people have had this question too. What do you mean the fair tax is going to tax services? Right now, if I go to my doctor or if I go get a haircut or if I get lawn maintenance, stuff like that, those guys don't charge me tax. Why in the world am I going to have to be paying this fair tax on these services that are not being taxed now?
Yeah, but everything is going to have to be taxed. In order to keep the tax rate at 23, we're going to have to include everything, every new product and every service. And yes, the services are going to be taxed. The tax will be included, but keep in mind that whether it's a doctor or the lawn maintenance guy or whoever it is providing these services, their costs of doing business are going to diminish greatly, probably around 20%. So they're not going to have to, and I believe we're going to have a guest at some point that can demonstrate to you in his business exactly how it's going to work. All right, we're still working on that interview, but that's coming up in a subsequent program.
Yeah, think about this. The money you pay to your barber or your doctor, et cetera, is taxable income to them. So included in the fee or whatever they charge you Doesn't matter whether you're getting a haircut or getting a doctor visit, the barber or the doctor still has to take part of what you pay for that service and send it up to the IRS as their income tax.
Yep.
So that's why services are going to be taxed under the fair tax, because there is already an embedded tax component in the price of the services that we buy today that goes away when the income taxes goes away. And again, it's replaced with a fair tax. So the prices at the consumer level are going to remain largely stable.
Yep. And keep in mind, used products will not be subject to the fair tax because they're already paid once by somebody. No double dipping, no double taxation. Also, an important aspect of the fair tax is that education and job training will not be subject to the fair tax. We want people to increase their education and get more job training, because generally that means that they get a better job, they get better pay, and when people have better pay, they spend more. And when they spend more, one, it's good for the economy. It has a ripple effect. Two, it provides more funding for the government. And so when you have more people earning more and spending more, it's good for everybody. So education and job training will not be subject to the fair tax.
Yeah, and the fact that the fair tax is going to change people's behavior, that's why it's so important. You might hear the term dynamic scoring when a bill is scored by the Congressional Budget Office as to how much it's going to cost and how much it's going to bring in. Right at the moment, they're doing that statically. It just assumes that whatever changes the things are going to continue as they are now. But with dynamic scoring, the fair tax is going to come out really better, because it is going to be a huge, huge economic stimulus.
Yeah, this static scoring, it's so ridiculous. It's not realistic at all. And now that Paul Ryan is the chairman of the Ways and Means, he's going to switch to dynamic scoring. I can't remember who it was, but a senator made an example. Well, if static scoring is a good idea, then you know what? If we increased the income tax to 100%, just think of all the government programs we can pay for with an income tax of 100%. We will collect all of the money that everybody earns. Just think of what we can do. Well, of course, that's ridiculous, because you would have a complete collapse of the economy.
Yeah, if the government's going to take every dime I make, I ain't going to work.
Yeah, what's the point? So static scoring was a dumb idea, and that's going away. That's as Bob says, that's going to be added to the trash heap of historical boo-boos. So
okay. Now, we mentioned earlier that the fair tax rate is 23%. Why not 24? Why not 22? How did we arrive, Ron, at the 23% figure?
Well, one of the things that I think we mentioned in the past, and we should have mentioned today, is that there's over $20 million worth of research behind the fair tax. They have researched every aspect of it, how it will be collected, how do we do this, how does it affect that industry. And one of the items of research is, okay, just what is the size of the tax? What do we need?
One of the design parameters is it has to be revenue neutral. How much does the rate have to be in order to raise the same amount of money that the income tax brings in?
Yep, that's right. And so a lot of that research went towards this 23. Now, there's something else you need to consider about the aspect of the fair tax. A consumption tax is more stable in terms of providing income or taxation than an income tax. When the economy goes bad, incomes drop a lot. They fluctuate much more.
People get laid off.
Consumption doesn't fluctuate as much as income tax. And so the 23% is going to be valid for just about any economic condition.
Yeah, because you've still got to buy food, you've still got to pay your electric bill, you've still got to put gas in your car, stuff like that. So your basic necessities are still going to be bought. Of course, the basic necessities, again, are not going to be taxed.
That's right.
As we mentioned earlier, when you buy something under the fair tax, you will get a receipt that shows you how much fair tax is paid on that transaction. But again, we've touched on this rather extensively, but let's mention it again here, that nobody owes a dime of federal taxes until they have taken care of their basic necessities, i.e. their spending has reached the poverty level for their household size. But since you're going to pay the fair tax on every purchase of new goods and services, that you will in effect be paying tax that you don't owe. That's what the prebate is. It gives back to you the money that was collected at the cash register that you don't owe, and you'll get that back in a monthly check. And for a family of 4, it's going to be right around $600 a month.
Yep. And as Bob pointed out in the last program, you did listen to the last program, didn't you?
Oh, yes.
Okay. That's good.
I was there.
The prebate can be likened to a tax refund at the end of the year.
It is a tax refund.
Yep. It just, in the current system, you do your taxes, like people are gearing up to do now. You file your return and so forth, and you get a refund. Well, that was a tax-free loan to the government. That was your money, but you're getting the refund back. And you can kind of think of the prebate as like that. And we spend a lot of time on the prebate. So, and I think it's pretty clear. We're not going to spend much more time on it now.
Okay, so in a nutshell, the fair tax is a consumption tax. You pay it anonymously at the cash register, the same way you pay your state sales tax. The state of Florida has no clue who you are when you pay that extra $6 for a $100 item, and it'll be the same way with the fair tax. The government will no longer have any right to know the intimate details of your personal finances. So it is a consumption tax that will be paid at the cash register. It replaces the income tax. It will be 23% inclusive, meaning for every $100 you spend, 23 of it will be fair tax. No fair tax on used goods, no fair tax on the education and job training. And again, you get the prebate to rebate back to you the fair tax you pay that you don't owe because your spending hasn't risen up to the poverty level yet.
And another thing we mentioned before, but it's worth mentioning again, business-to-business purchases will not be subject to the fair tax, all right? Because right now, with the income tax that we have, every time a business does something, anything, the income tax is involved because all the people that work for that business pay income tax, and the company pays income tax, and there's compliance costs. All that nonsense goes away, and so when a business buys tools, a pickup truck, a new typewriter, a new computer, whatever, all right, business-to-business purchases will not be subject to the fair tax. I can tell you, though, let's say that business uses that pickup truck for 3 or 4 years and then they sell it. At that point, when they sell it to a consumer, then the fair tax will be charged. Okay, so they're not going to escape, all right? But we don't want business-to-business fair tax because that starts this rolling effect of the embedded costs, and that just makes a mess of our current economy. And it makes a mess of prices. Prices go up because of these embedded costs. So no business-to-business fair tax.
Okay, we got a few minutes left here. Let's touch on some of the advantages of the fair tax. Now, going on right now, there's a letter to the editor in our local newspaper where somebody will inevitably raise this thing, the fair tax is going to cause this huge black market. It will be evaded in massive quantities, and you just have to sit there and laugh at someone and says, do you really think that there's going to be more tax evasion with the sales tax you pay at the cash register than we've got at the current income tax? It is insane how much evasion goes on with the income. You could not devise, take a blank sheet of paper, you could not devise a system that invites more evasion and more fraud than the current income tax. But one of the advantages of the fair tax, it will eliminate, we talked about this on the last program, $450 billion a year that the IRS admits is owed and is never collected. Fair tax fixes that.
How are you going to avoid the fair tax when you're going to Walmart or Target, Sears, whatever, Walgreens, any of the drugstores and so forth, any of these stores? You go up to the counter and say, hey, I'd like not to pay the fair tax? Come on. It's not going to happen, all right? And most purchases in this country are made at these large stores, the vast majority. All right, I don't know how people think you're going to avoid the fair tax. It's just not possible.
And from the retailer's standpoint, it's pretty much the same as collecting the state sales tax, which they're already doing. The mechanism is in place to collect it already. It is collected by the states, remitted to the federal government, and the mechanism's already to do it. So it's going to be easy to implement, incredibly more efficient than the current system, incredibly less evasion than we've got under the current system. There's just no way that the fair tax is a bad idea.
Yeah, the fair tax is very simple. That's probably one of its greatest attributes. It is fair and it is progressive, as Bob has explained. It's also transparent. Like I said, you're going to see the fair tax proceeds on every receipt. We're going to know what's happening to our tax money, how much Congress is getting. Also, transparency applies to Congress. They cannot quibble and mess around with the fair tax like they're doing with the current tax. Whatever they do is going to, because the only thing they can do is change the tax rate, right? And as we mentioned, what congressman is going to want to brag about, I'm going to change the tax rate from 23 to 24? I think they'll get tarred and feathered. So it is transparent on both ends of it.
Well, it may be adjusted a little bit, but you're not going to be able to pick out little pockets where this guy gets a break and this guy doesn't.
That's right.
That's what we've got now. We've got like 74,000 pages, most of which is, special exemptions for special people that lobbyists have bought tax treatment. And most of the 133 pages that the fair tax bill is actually notations of what is going to be repealed. So the actual how the fair tax works doesn't even take anywhere near 133 pages to explain.
The fair tax will make it impossible for Congress to play class warfare via the tax code. They just can't do it because, like Bob says, they make a change, it applies to everybody. They just can't play favorites with it.
Okay, so the $64,000 question becomes, how do we convince our politicians to give us the fair tax? We think it's a great idea. I would love to bring home the full gross amount of my paycheck. I would love to get a tax rebate every month, but the politicians don't want you to do that. They like the system as it is where they can continue to sell tax favors to lobbyists. But how do we get the fair tax? And the answer to that is, well, of course, most obvious thing, contact your senators. Contact your congressional representative and tell him you want the fair tax. Because, again, it doesn't matter what party affiliation you are, what ideology you subscribe to. A politician wants to get elected and wants to get reelected. And when and only when the fair tax becomes a winning issue at the ballot box are we going to get it.
I'm going to tell you about, I think I mentioned this before, I'm going to mention it again. There's a very convenient way that you can communicate with your representative and your two senators, and that's through the website PopBox, PopVox.com, PopBox.com. It's up and running again with the new legislation. You can go there, you can sign in, you have to give it your name and your address. It needs your address because that way it figures out what congressional district you're in, who your representative is, and who are your two senators. And then you look up any piece of legislation, not just the fair tax, anything that you care about, and you can weigh in. I oppose this legislation. I am in favor of this legislation. And then you can write why you oppose it or why you're in favor of it. And that letter, that note that you write, goes to your representative and your two senators. It's very convenient. And the people in Congress and their staffers really pay attention to PopBox. It has become very popular, not only as the people's voice, but it's very popular on Capitol Hill because they can find out exactly how a piece of legislation is faring in their district right now up to the minute.
And that's free to use.
Yeah, it's absolutely free.
And something else you can do, and you really need to do, is to join Americans for Fair Taxation. That's the national grassroots organization supporting the fair tax. Their website, www.fairtax.org. There is a join link up in the upper right hand of the page, and you open that up, and I don't know of any other organization that lets you decide how much to pay for your membership. You can join AFFT for as little as $5 a year.
Yep. And it like Bob says, it's very important, all right? We're opening up, they've already opened a lobbying office in Washington. As far as I know, this is the first time. So we have to have people up there that go to the congressmen and so forth and say, we have 1 million members of the Americans for Fair Taxation. So please become a member. Please take the time to go to our website, fairtax.org, and become a member, contribute something and towards your membership, and we will get this done. We need a lot of members, and we will get it done.
Or you can text the word member to 68398. Member, MEMBER, to 68398. And that's just about going to wrap it up for this edition of Fair Tax Power Radio. Again, if you've got comments about the show, questions about the fair tax, our email address, thefairtaxguys@gmail.com. We certainly would love to hear from you. And until we meet again, Fair Tax Guys, Bob Paxton and Ron Malera, we're reminding you, the fair tax,
when you understand it, you'll demand it.